What's up, everybody? Good morning. Good morning. Shout out to y'all. What's going on? Oh, what's up, Ed? Shout out to you. Shout out to you. Welcome to this live stream. We're going to just pretty much watch price, do some tape reading, technical analysis. We can conversate, talk about the upcoming week and the things that are to come. We just chilling on this Saturday morning. It is Saturday, May the 17th, 2025. So shout out to y'all. What's up, ZZ? Shout out to you. Shout out to you. What's up, Tino? Shout out to you. Appreciate y'all joining. It is currently the New York lunch session. So we're currently in New York lunch. The AM session has completed. I'm sure a lot of y'all have been watching price, wondering how low price can go, because y'all seen it recently here during the the lunch session. The morning session. It dropped down to 231. So I'm sure a lot of people are kind of panicking. So let's take a closer look at price to see what we're doing. We are currently intraday. And we're going to watch price from an intraday perspective. So we just entered lunch. It is 11:26 New York Eastern Standard Time. So we are in the 11 o'clock hour. Let me pull up a split screen. Let's take a look at the higher time frame. Let me clean some of this up. If y'all just joining, man, make sure y'all hit that like button for me. Subscribe to the channel. So on the daily, over here on the right side of my chart, on the right side, this is the daily time frame. On the left side, this is a 5-minute time frame. So far this morning, earlier in the morning, during the London session, in the New York AM session, we dropped down. Look over here on the right. We dropped down, took out the previous day's low. You remember, below old lows and above old highs, that's where liquidity is. That's where the pending orders are. So what did we do so far? We dropped down, took out the low from Friday, and we came down and traded into this inefficiency, which is this fair value gap, this BOSSVISION. Also taking out this old low right here. See this old low right here? We came down and took that out. So anything below the market is a discounted market. So we dropped down there to offer a discount. Now, that's a short-term discount. Can we continue lower? Yeah, let's see how we complete the day. But that was them dropping price down to a discount. So what does that look like intraday? Look over to the left side of my chart. So we know we sticking to the higher time frame narrative and bias. We're sticking to that higher time frame narrative and bias. That helps us, aids us, and assists us on lower time frames by understanding what the higher time frame is doing. So over here on the left side of my chart, which is the 5-minute time frame, if we just zoom out a little bit, this low right here was Friday's low. The low that formed during the Asia session last night. So that's that low right there. So we have liquidity below the market. We have pending orders below the market. Also, we got pending orders left behind during the London session up here. So this was early in the morning. And if you're in the United States, this was like around 2 o'clock, 3 a.m. Eastern Standard Time in the United States. So you can see us drop down inside of that fair value gap. See this green highlighted area? We drop down into that. And then, yes, we can trade through it, but then we rapidly displace higher because we use that as support. We rapidly displace higher. So earlier this morning, the market, this price action right here wasn't clean. This wasn't clean at all. Right now, y'all might not understand this pattern right here. What is this pattern right here? So let me show you. We got a high, we got a low. So that's a swing high, swing low. Excuse me. We got a low right here. See this low? Low to the high. Low, high, lower low. And then the market displaces higher, just like that. Low, high, lower low, displacement higher. What is that right there? Y'all tell me in the chat. What is that? If y'all just joined, make sure y'all hit that like button, subscribe to the channel. Click the link in the description if y'all want to get this insight, learn how to trade technical analysis. Y'all tell me in the chat, what kind of pattern is that? I've talked about it before. You probably haven't seen it in a while. What kind of pattern is that? What's up, Malcolm? Shout out to you, Malcolm. Salute, salute. Nobody knows what kind of pattern that is. This low, swing low right here, swing high, lower low, displacement higher. What is that right there? And I'm gonna show you a PD array. The PD array is, see this candle right here, this green candle? Yeah, shout out to you, Malcolm. That is a bullish breaker. That's a market structure shift, a bullish breaker. Low, high, lower low, displacement higher. That's a shift in market structure right there, temporarily. So I'm gonna use this bullish candle right here. You see this candle? I'm gonna take a rectangle from the top of the wick down to the bottom of the wick of that candle. And I'm gonna stretch it out. I'm gonna change this color right quick. Let's give it like a gray color. And I'm gonna put up that middle center line just like that. So that is a bullish breaker. So it's not random, it's algorithmic. These things repeat over and over again. And why did the market shift? Because we dropped down to a higher time frame PD array, which is this daily fair value gap. Yes, we traded through it, but the market rapidly displays higher. Also, the market is in a high resistance condition. So we can expect a lot of volatility and a lot of choppiness. But look how once we trade back higher, look how price returns back to this price level. Look how price returns back into this breaker. This candle right here is a breaker. You see how we trade down into it? We trade down into it. Now let's see if we can displace higher and start taking out, let's say this high right here, this swing high right here is the AM session high. That's buy side liquidity right there. So I'm gonna highlight that. That's the buy side liquidity from the the New York AM session. And if y'all just joining, we're tape reading the market. Tape reading the market. And this is what you do on the weekends when y'all get off work. For the people that make excuses, say I can't do it, I don't have time to do it. That's bullshit. The markets are going into a 24-hour market. You already see that with crypto. And once the traditional markets become 24 hours, you have no excuses if y'all want to learn this skill set. So we're trading inside of this breaker. Now the breaker can fail. That's just how trading goes. But this is a PD array. So I'm gonna take a Fibonacci and I'm going to grade the ranges, just like I do the fair value gaps. So they go out. I'm grading the breaker. So inside of this breaker right here, I am showing you the ranges inside of that breaker. So look at the midway point. That's the 50% level. Anything above it is a premium. So look how we're trading back down into it. Look at the 0.75 level. Y'all see that? Is it random that we boom 1, 2, 3, 4, and respecting that level right there? Do y'all think that's random or do y'all think that's algorithmic? Do y'all think that's random or do y'all think that's algorithmic? Y'all let me know. This is intraday price action. This is going to help us to determine what direction the higher time frame, give us more insight on the higher time frame. Now, are we complete coming down lower? It's 50-50 right here at the moment. Are we done coming down lower? Let's see. Based on the higher time frame. Let me zoom back out to the split screen. I am still bullish. Last night, I showed y'all, if y'all watched the live stream last night, what I did was I showed y'all how to determine their dealing range. So I took a Fibonacci from this low right here. This is the past 20 trading days. And I went up to this high right here. That's 20 days worth of price action. You see that? I did this last night on the right side of my screen. So that's our dealing range. That's the range that we're currently working with. There goes the midway point. That's the 50% level. Anything below it is a discount. So as we drop below the 50% level, look how we drop down into this daily fair value gap right here. That's a discount. Do we want to come lower? Well, if we do, there goes one right here. This large BISI. I would prefer them not to come this deep down into this, but hey, it can. And if it does, we just get in sync with it. But they drop it down to discount. Now let's see if they want to push it back up to a premium. And range inside, you know, they might want to just range it until next week. They're trying to get y'all shaken out right quick before the next wave of institutional capital and liquidity comes into the market. So that's what they're pretty much doing if you're a long-term investor. But me, I'm not worried about that. We over here watching intraday price action because this is going to apply once those derivatives go live. We're going to be trading them. I'm going to be in here trading them. I'm going to be offering signal services. So y'all might want to sign up to the Patreon if y'all going to be interested in trading the derivatives. So let's say we punched through that high right here. What did we do back in, let's say, London? We had some minor liquidity right here. This swing high, that's some minor buy side liquidity in these swing highs. But let's see what we want to do. This red trend line right here, that is the 50% level of that daily Fibonacci, that dealing range. That's the midway point of that daily dealing range. So let's see what we want to do. But shout out to y'all, man. How's everybody Saturday going? Y'all kicking it? How's everybody doing on this Saturday? Let me get a quick roll call. Y'all shout out where y'all from, city, state, region, country, whatever y'all want to shout out. What's up, Jason Chan? Shout out to you. I don't think the judge ruling was by accident. No, I think it's not by accident at all. I think it's all coordinated. Everything is planned. Potentially driven semantics to further stall the innovation. I don't think they're stalling innovation. They are pretty much stalling people from investing and getting them out, getting their hopes up. They're not. Innovation is here. Matter of fact, I'm gonna show y'all in a 1 second. I'm gonna show you how far innovation has come. And I just discovered this yesterday by watching another content creator's channel. It has nothing to do with trading or crypto. It was a whole different sector, and I'm gonna show you how integration is here. But let's see how price. Do y'all think it's random that I'm showing you how price is operating? How it drops down until this breaker. It uses it as support. And now price is starting to reach higher. I want to target that right there. Malcolm, Camden just cleared off my chart so I can get my reps in and redo everything. Chill Saturday. Shout out to Camden. Shout out to Camden in the building. What's up, Nelson? Just buy long term. Shout out to y'all, man. Shout out to y'all. But yeah, Malcolm, man, just this. I love to do this on Saturdays, man. Early Saturdays. Get it in early, and then just wait till these markets are tradable over the weekends, man. Y'all just don't know. Like everybody else is gonna want to go out to the clubs, go out to party, which you can do that after you make this money, but it's fulfilling to be able to go, you know, if you're working your 9 to 5 and you got your weekends off, and then just come and sit down and go ahead and make about the trade I showed y'all last night. That was 2100 with XRP, and we calculated the CME futures. So for every tick for the XRP CME futures, that is $5. So for every 5 ticks, that's $25. So for example, let's say I entered in this breaker. 1 second. Let's say I entered right here at the 0.75 level, right there. That's my entry. And then let's say we're just going to do a quick scalp. So entry up to this high right here. Entry up to that high. That's our take profit. We're going to be in and out. Our stop loss will be at the bottom of the breaker right here. That's a wide stop loss, but it is what it is. That is 134 ticks. So y'all do the math in the chat. 134 ticks, quick scalp in and out the market on a Saturday during the lunch. You know, it's lunch hour. You might have slept in. You might have been up early. 134 ticks trading the CME futures. One tick is $5. Coinbase futures. I'm waiting for the Coinbase futures to become more liquid. I know the CME gonna have a lot of liquidity, and then we gotta wait for some weeks, and we also gotta wait for like those regulations. But because right now that these futures are going live, but they're not really liquid until they become liquid. That's when the institutions come in and start driving it. But once they become real liquid, we're gonna be covering that, man. I'm gonna be covering it all. You know, I just need, you know, these are new products coming to the market. So once they go live, you know, once they start going live and becoming more liquid, I'll definitely be covering all that ZZ. So let me do this math right quick. 134 times 5. That's a quick $670 right there. If we were trading the CME futures and we just enter this trade and we take profit right there, that's 675. You got 675. Let me redo my math. I got 134. That's how many ticks it is. 134. Every tick is $5. So 134 times 5. I got 670. So not bad. Our risk is, so we're risking 90 ticks. You good, Malcolm. You can, I mean, it will go up to that 135. So yeah, I'm showing you 134, but you better believe it would extend to that 135. So roughly around 675, 670. Our risk is 90 ticks. So 90 times 5, that's $450. So you're risking $450 for a return of 670 if you was trading the CME futures. Now, like I said, this is a wide stop loss. I don't like having wide stop losses, but sometimes you might have to, and that's okay. If you start to see it come back against you, then you can go ahead and kill the trade. But for example, this is an example of the CME futures trading or a quick scalp higher. If we take out that buy side liquidity right there, I'm going to want to see it come up, take out this high right here and this high right here, trading up into this SIBI, which will bring us right back to the midway point of the Dillon range right there. Market is high resistance as well. So let me show you right quick. See this SIBI right here? I'm gonna highlight that. It's a 5-minute SIBI right there. ZZ, the capital depends on whatever the requirements are from the broker. So the broker is going to require you to have a minimum requirement. So your capital, it varies depending on how much capital and equity you're willing to work with or have in your account. But as long as you can meet the minimum requirement for leveraging with the broker, then that's all that matters. We will find more details about that once it goes live, though. I will be able to tell you, okay, well, once you be able to sign up to a broker, I'll show you more examples. For right now, it's only going to be on Robinhood, and I'm going to need to see it spread out to more exchanges or brokers. What's up, Donna? Shout out to you. So look at this 5-minute, this 5-minute SIBI right here. Trying to give it another color. That's a 5-minute SIBI. If we displace higher, that's a quick scalp right there, 670. And then if it goes higher, I want to see it take out this high right here. That's a quick minor buy side liquidity right there. And then trade up into this BISI right here. And we can extend that out higher if we do go up there. If we go trade up into this SIBI, that will be 212 ticks for the CME futures if we were trading the CME futures. This is not the CME futures. This is just spot XRP. So we're going to use this as an example. It's 11:44 a.m. We have a macro coming up. So we have a macro coming up here in a minute. In a few minutes, we have a macro. So 11:50 to 12:10. That's the macro. If y'all, I got 24 people in the building, 9 likes. Y'all smash that like button for me. Smash that like button, share the video, subscribe to the channel. Click the link in the description if y'all want to learn technical analysis. Be on the lookout for the trade signals, the signals coming up. I'm gonna probably start off with the S&P and the NASDAQ until these things become more liquid. What's up, Big Dre? Shout out to you. On this Saturday morning, wherever you're at in the world. Could be Saturday afternoon, Saturday evening. It is the lunch hour in New York. So shout out to y'all. What's up, B Rush? Yes, Brian McKnight in the flesh, in the building. Shout out to you, Brian McKnight. And we're just going over what it would look like if we was day trading or scalping the CME futures that will go live Monday with the CME, showing you trade examples. We're putting the figures behind it. So remember, every tick will be $5 for the futures contract. So I'm just highlighting what it would look like. So I'm gonna come back to this in a minute. So I wanted to pull this up. I was looking at this right here. I was looking at this website right here. This is called ProMeet. So hopefully y'all are paying attention. So I'm thinking about integrating this. I just found out about this website just randomly going on, and this had nothing. This content creator had nothing to do with crypto. It's somebody that I normally watch, and they like to get paid with their content or whatnot. So they was advertising and promoting this website. So I didn't think nothing of it. So I said, because I do Patreon. So I'm just trying to get better with what I have to offer or whatever. I'm just trying to get better with my business or whatever I do, which is my business, me Incorporated. How can I get better to provide a better experience and a better product? I'm trying to just provide a better product for what I got to offer with my lessons and my content. So ProMeet. So I start looking at this website. So I go down. I didn't know nothing about it, but look who sponsors this website. Y'all wouldn't believe this. It's a Web3 website. So let me go to ChatGPT right quick. Let's go to ChatGPT because I didn't know nothing about it. Sometimes I just go to ChatGPT. It spits it out for me. So I'm like, okay, what blockchain is ProMeet? So what I didn't know was ProMeet is a Web3. Check it out. ProMeet is a Web3 content monetization platform that enables content creators to sell videos, live streams, meetings directly with their audience. Check it out. This was key, with instant borderless payouts. So somebody earlier said, that they're trying to stall innovation. No, they're not stalling innovation. Innovation is here. It is currently here. So this website is a Web3 application website that somebody who was not in crypto was promoting. This person their channel was not cryptocurrency, none of that. They were just like, hey, I'm able to get paid with this new platform. So it's a Web3 platform, and when they pay you with instant borderless payouts. So that's the first thing. I'm like, that's interesting. So this website has a blockchain infrastructure. It said initially ProMeet operated on the Polygon blockchain. However, as of March 2025, the platform migrated to the base blockchain Ethereum layer 2. So it's an Ethereum layer 2 blockchain website solution developed by Coinbase. So Coinbase is behind this website. It says this transition aims to, and if Coinbase is behind it, BlackRock is in there somewhere too, right? This transition aims to provide enhanced scalability, security, and reliability, aligning the ProMeet commitment to offering robust and efficient platforms. So the main takeaway about this website is stablecoin utilization. And this is all from ChatGPT. I didn't know nothing about this. I just seen the chick was like, yeah, I'm able to get paid instantly. So I'm like, that's interesting. Because, I'm just trying to better my platform. It says ProMeet utilizes USD coin, USDC. So when you get paid on this platform, they pay you out in USDC. They pay you out in USDC. So that is interesting to y'all who want to create content or have a service to provide or a platform. They have a website that instantly pays you out. It says as its primary stablecoin for transactions, USDC is a fiat-backed stablecoin pegged to the United States dollar. We know that. We know what's going on in Congress. We're waiting for those bills to get passed. Offering stability and transparency in transactions. We already know that. So the integration of blockchain technology in the stablecoin payments allows ProMeet to provide seamless and efficient platform for content creators to monetize their work globally. So I find that very interesting. Shout out to you, Gabrielle. Shout out to you. So back to ProMeet. This website is a Web3 application built direct. It doesn't look like it. Like I said, this is proof that people are not going to know they're using blockchain. They're not even going to know nothing. They're not even going to know that they're using blockchain. So right now, with let's say this is my Patreon. Y'all go sign up for it. Patreon isn't a Web3 application. This website is not a Web3 application. It's not even integrated with Web3 stuff. So when y'all sign up to this, it takes time to process the payments. It's not instant. And then let's say I cash out or whatever from my payments. I take all my payments that people buy my product. That takes 3 to 5 days. It's not instant. So the integration is kind of behind. It's not Web3. It's still a Web2 application, Patreon. Also with ProMeet, because they're using stablecoins, they allow content creators, they give content creators 90% of their earnings. 90% of their earnings. They only take like 10%. But compared to Patreon and other platforms, YouTube take like 40-50% from their content creators, which is some bullshit. YouTube got to do better, man. YouTube got to do better. But ProMeet only takes 10%, and then the transactions, because you're dealing in transactions with stable coins, they're pretty much free. They're pretty much free. So it's already here. This website, which I'm going to start integrating, I'm going to be looking into it. It says your digital store ready in seconds. Sell videos, photos, live streams, and more, powered by stablecoin for borderless and instant payments. And as right here, you see it scrolling down below. You see it's sponsored by Google Cloud. We got Circle. There goes Circle, Polygon, and whatnot. So I just found this interesting right here. For y'all, I feel like everybody, if you have something to offer, I don't give a damn if you're a mechanic, if you're a barber, whatever you got to offer, you need to monetize what you're doing, because that's the new age. The new age is not working for somebody. The new age is creating your own job for yourself. And in this digital age, you need to be able to market and promote yourself and sell your, monetize off the internet, because the internet is monetizing off of you. So that's what I believe. Polygon, isn't Z-Back on Polygon? I'm not sure. I'm not sure. Y'all in the chat answer B Rush. Is Z-Back on Polygon? But this is very interesting, man. This is a crypto-based website for content creators to earn. And they're paying you out in USDC. And it's a very sleek website. And it's also sponsored by Coinbase. So I just found this out yesterday. But I'm going to try to integrate this, and we're going to see what it looks like. Let's come back over here. Oh, just like that. Just like that. Oh no, it failed. Okay. So see on this trade right here, because the market is high resistance, I probably would end this trade. So I will go ahead and exit. Matter of fact, it stopped me out. So that's a good example of right there getting stopped out right here on this XRP futures. If we was trading this, it failed. So I would go ahead and kill the trade or get stopped out. That's the risk you take. You got to be comfortable with that. So now let's readjust. Let's go out to the 1 hour. Let's go out to the 1 hour time frame. As you can see, price is high resistance. Price is high resistance, chopping around. And we're actually trading down into an order block, but also the daily fair value gap. But we got liquidity below the market. So let's see if they want to go get lower or go lower. By identifying the high resistance conditions in the market, that will help you from just being in the market all the time. The market is high resistance liquidity conditions. Let's go back down to the 15 minute. Let's go down to the 1 minute. Also, looks like, yeah, we're in the macro as well. 1 minute. Look at that low resistance on the 1 minute. Low resistance on the 1 minute. Oh, what's up, Lauren? Shout out to you. Shout out to everybody in the building. We got 30 people in the building. Shout out to y'all. I'm not going to keep y'all long today, man. We're just going to just tape reading price right now. I like to do this on the weekends sometimes just to stay sharp, sharpen my skill set. Still high resistance. Look at the higher time frame. This is one of those days, because it's the end of the week. This is one of those days where they can just keep bouncing price back around. I'm gonna go ahead and tell y'all that. This is one of those days where they can just keep back and forth, bouncing price back and forth. But if I had to pick a coin, so again, when the market is high resistance like this and you just feel the need that you want to get in there and trade, and it's really 50-50, because look how many times they're working off at this level right here, this daily fair value gap. If we had to just pick a side, which side would y'all pick in the chat? What side would y'all pick? Which side would y'all pick? I'm going to go ahead and remain with the daily trend. I'm going to remain with the daily trend. See how we trade back down into that daily fair value gap, which is highlighted green, and now prices using it as support. So again, like high resistance, high resistance. Yeah, man, definitely get those likes up, man. Definitely get those likes up. Now there's a SIBI right here, but we traded down into that higher time frame daily fair value gap, so we can definitely boom bounce higher if they want to. Very difficult read, very difficult read. So if we look at what range are we in? So we're looking at the previous session range. So if I take a Fibonacci from this swing low right here up to this swing high right there, that is the Diller range within the 5 minute time frame. That's the Diller range. That was the previous session, which was the AM session low and the AM session high. That's where the liquidity is. And we're just ranging right at the midway point, which is equilibrium. Can't make this up. See the 50% level? We're just stuck inside of that 50% level. So it's 50-50. It's 50-50. It can go higher or lower, and that's just one of those days. It's the end of the week. There's a lot of damage that has been done earlier in the morning, earlier into the day. So now they can pretty much just chop the price around. I got 33 people in the building, 17 likes. Y'all smash that like button for me. It don't take nothing. It don't take nothing. Look how we just traded up into that, boom, SIBI right there. Y'all see that? Traded up into that SIBI. During these conditions, I would just be sitting on the sideline reading price. See that right there? The top of that wick. Trade up into that. That's all it took. Displacement lower. That's all it took. Now, okay, I want to say it wants to go lower. Take out the previous session low. So let's see if we can get in sync with that. Cut through this fair value gap. Boom, 12 o'clock. We just began the new hour. It's the 12 o'clock hour. Let me throw up these trend lines right here. So from 12 to 1 o'clock, it's the 12 o'clock hour. Right there. So in between these two vertical trend lines, that's the 12 o'clock hour. Smash that like button for me. Subscribe. Let's go down to a 15-second. Now we're going to go super high frequency. 15-second time frame. On the 15-second time frame, we just traded up into this SIBI. 15-second SIBI. Every one of these candles take 15 seconds. Can y'all do this type of trading? Y'all think y'all can do this? Every 15 seconds. Got to be quick. Displacement lower. Three, 2, 1, 15-second right there. Boom, just like that. We're inside of that daily fair value gap. There's a small little inefficiency right here. We trade up into it. Just like that. Boom, displacement lower. Do y'all think that's random? I don't think that's random at all. I see this repeat all the time. Now, we got to be careful because we can trade back through it because we're in that higher time frame, that daily. So we can use that daily as support. So you got to be careful. Trade back up into it. Look at this ghost pool right here on the 15-second time frame. Right there. You got to be careful. I want to see us trade through that. Just like that. So boom. Went from internal range liquidity, external range liquidity. So do y'all think that's random? Y'all raise y'all hand. Who's ready for this high frequency trading like right here? Boom, another SIBI form right here. Who can do this type of high frequency trading, or are you interested in it? Every 15 seconds. Trade into that SIBI. Let's trade lower. See, when I'm on that daily, that monthly, that weekly time frame, it takes a long time for these things to play out. But when I'm on a 15-second time frame, I can give y'all more examples of how this looks. Way more examples on how this looks. Trade into it. 1, 2, 3. Displacement lower. Now it looks like we're going to go ahead and take out that sell side liquidity below the market. So that's what I'm going to anticipate. Trade back into that SIBI. Got to be careful. Let me zoom out right quick. Always zoom out when you're not for sure. You got to know what the higher time frame is doing. This is a 1 minute time frame. Let me go ahead and remove this. And we got the previous session low right there. So like I said, on that 15 second, you got to be careful. We're trading up into this 1 minute SIBI right here. But you got to be mindful that we're in that daily fair value gap. So we can definitely trade it back up higher. So that's a 1 minute SIBI right there. That supersedes that 15 second. Don't forget that. That 1 minute is more superior and has more influence than that 15 second. And if y'all want to learn how to do this, y'all click that link in the description for the Patreon so that y'all can get those lessons. Yeah, I think for me, not lower than the 15-minute time frame. It's okay, Lawrence. I was at that point in one time too before. I was there at that point one time two before. So we're caught between this 5-minute fair value gap and this order block right here. So that's a bullish order block right here. Like I said, you got to be careful and mindful. Okay, I want to see us trade. I'm bearish right now. I want to see us trade below this. But you got to be mindful because we're in that daily fair value gap. I want to see us cut through that daily fair value gap. If you don't know what I'm talking about, over here on the right side of my chart, see we're inside of that daily fair value gap. See this daily BISI? We're inside of that. That's still a discount. So we can use that and then trade higher. But I want to see us cut through it. I want to see us cut through it. And that today the market is highly manipulated, high manipulation right now. So that's what I'm saying. See, we trade back down into that daily fair value gap. Now look over on the right side. Displacement higher, just like that, because they're just holding price inside of this void, inside of this inefficiency. They will do that sometimes and manipulate the hell out you. And look at the displacement higher, just like that. So that's the indication that displacement, that's an indication that they want to reverse price. That's an indication that they want to reverse price. So when it comes to trading, man, y'all gotta be universal. You gotta be able to adjust on the fly. Like, you might think, and it's okay to get it wrong. Y'all not gonna hear too many people say, oh, it's okay to get it wrong. You're gonna see me get it wrong. It's not 100% perfect, but I'm highly accurate because I know what's going on. I'm highly accurate, and you have to be able to adjust. You got to be able to accept that, okay, I'm not right, and I can adjust on the fly. So right now they're just holding price inside of this higher time frame fair value gap. Holding price. Y'all smash that like button for me. I'm not gonna keep y'all too much longer. Just tape reading today, giving y'all some insight. Let me remove those 15-second. Now, when the market is in a low resistance liquidity condition, those 15-second scalps and entries, they're real fluid. Real fluid. Okay, we got a 1 minute BISI right here that we just traded down into, but I'm not trusting it. Not trusting it. And this is pure manipulation. So what you need to do is you need to wait whenever you see price just holding in one position. You sit back and you wait. What are you waiting for? You're waiting for institutional sponsorship. You want to see rapid displacement, either higher or lower. And that will tell you, okay, they're repricing it to go higher, or they're repricing it to go lower. So over here on the left, zoom out right quick. 1 minute time frame. Minute time frame, just like that, displacement higher. Displacement higher. So we still got the previous session high. That's the New York AM session high right there. We got the last hour high right here. And let's just see if they want to send it higher. I need to give these a different color. 1 second. 830. Give it that color. So yeah, we're getting that displacement higher. So that's an indication that we're bullish again. And this is, like I said, high resistance, back and forth trading. So there's opportunities shorting and buying. So let's get back in sync with that 15 second. Go down to a 15 second time frame. Let's see if we can find a quick entry. Nope. Boom, right there. Let's see if they use that as a entry point. That's a 15-second fair value gap, just right there. You see that 15-second gap, and then we got a larger one below price. So let's see. Might need to zoom out to the 1 minute. They might want to wait for that 1 minute candle to close right there. But again, man, high resistance. Let me zoom out to the 15 minute. Go out to the 15 minute. 15 minutes still kind of looking bearish. So again, I'm gonna tell y'all right now, what profile are we in currently? What profile are we in currently? And that's gonna be the reason why price is doing what it do. What's the market profile right now on the 15-minute time frame? When in doubt, zoom out. When in doubt, zoom out. So always zoom out when price is being very difficult. It's not flowing correctly. What's the market condition? What market profile are we in? So on the 5 minute, we traded up into this CME. Yes, shout out to you, Gabrielle. The market profile is in seek and destroy. Everything is failing. Nothing is holding cleanly. So whenever the market is seek and destroy profile, just sit on the sidelines and wait. You sit on the sidelines and wait for further information. So we can see we traded up into this 5 minute fair value gap. Also, you got to zoom out to understand, you got to zoom out to get a clearer picture. Get a clearer picture. So right now in these conditions, I'm not going to be on that 15-second time frame. Whenever the market is in seek and destroy, forget the 15 second. And you also got to be careful on that 1 minute time frame as well. Yes, consolidation and high resistance. It's easy to identify. You just zoom out. Just zoom all the way out. Real easy to identify. Go out to the 15 minute. What is the 15 minute telling you? Well, if we zoom out, you can see, okay, price has been bearish, but it's been in a high resistance condition. You see all this? High resistance. Sideways consolidation. A lot of choppiness, a lot of wicking, and I don't think it's done not going lower. I still think it want to go lower, but during this particular hour, the lunch hour or the lunch session, it's being high resistance. Very difficult. So I'm going to remain, and then, okay, let's go out to the daily. The daily has done a lot of damage so far. So the beginning of the day, I would have told y'all, I want to see us take out previous day's low. I did that last night, and then we got that last night. Take out the previous day low and trade up into this fair value gap. I told y'all that last night in the live stream. So we did that, and then right now they're just holding price inside of this daily fair value gap. That's the manipulation. You're witnessing it. So whenever they put the market in a high resistance liquidity condition, seek and destroy profile, that is the manipulation from the market makers. Straight manipulation. Y'all seen it when it runs clean. Last night we got a clean run. So we just ended the macro. It is 12:13. So at 12:10 the macro ended. So during that choppiness that we just seen, that was the macro, which I didn't even take into consideration. So I kind of forgot that the macro was going on. So now let's see if he wants to continue lower after trading up into this 5 minute CME. Let's see if the real move wants to take place to come lower. You see this right here that I highlighted? That's an inversion now. That's an inversion gap. And like I said, I'm not going to drop below that. Well, I need to. I kind of need to because I probably can find a clear entry. Let's go down to a 15 second. On the 15 second right there, boom, entry. You can use these 3 consecutive candles. That's an order block, or you can use this this SIBI on a 15-second. Right there. It looks like it wants to trade back through it. High resistance. High resistance. Just like that. Yep. So again, zoom out 1 minute. 1 minute time frame. I'm trying to stay off that 15-second, but again, I got a bad habit, me personally, going down to that 15-second time frame and being too locked in, but I just wanted to get a clearer look. And yep, they're going to use that as support. Push price back higher. And then you can see again how we traded outside of that daily fair value gap. So we dropped down into the daily fair value gap. Displacement higher, back into this 5-minute orange highlighted area. That's a 5-minute SIBI. And then they drop it back down to the daily fair value gap. And then you would think, okay, we're going to cut through it. Nope, we drop back down to it. And then boom. So look at the choppiness going back and forth right here. High resistance. We go down to a discount, premium, back down to a discount. And it looks like they want to come back out of that daily fair value gap to a premium. So what you have to do in these conditions is let all this play out. And then they're going to indicate when they're ready to reprice the move with this, like right here. For example, I'm going to show you. You let all this play out. So you got to kind of like be patient and just watch it, tape read it. And then you want to see something like that right there. You want to see a displacement either higher or lower. That's going to indicate to you, okay, they're repricing it. But we haven't seen that yet. We haven't seen that yet. I'm bearish. It's 50-50. But if I zoom out to the daily, I want to see us drop lower. There goes that displacement. What I was just telling you about. That's exactly what I was just saying. You got to wait for all this. And then boom, you want to see that drop. Just like that. So now let's go to a 15-second time frame. On a 15-second time frame, boom, there goes a entry, trade up into that. Now let's continue lower. This is good study as well, y'all. Like high resistance conditions, good to study, because if you are able to identify high resistance liquidity conditions and seek and destroy, that makes you a better trader. That makes you a better analyst, because you know when to stay in. You know when to stay in and out the market. So look how we trade into that right there. Now let's displace lower, cut through the daily fair value gap, and come down and take out the sell side liquidity. Just like that. Just like that. Just like that. That's what I want to see. Cut through it now. Now we can trade back into it because of the conditions. But I want to see us go ahead and displace lower. Let me zoom out to the 1 minute. Oh yeah, that was a very bearish indication. If we trade back into it, look at that ghost pool right there. I'm looking at that ghost pool. You see this wick? That's a ghost pool on the 1 minute. Right there. You can use that as a selling entry as well. You can use that ghost pool. You see us trade up into that right there. We could trade up into these levels as well. I prefer to stay below the 50% level. I prefer to stay below that 50% level. Now let's go to the daily. Look at the daily. The daily looks like it hasn't done nothing. Over here on the right side of my chart. There goes the 50% level, and we trade through it. That's the manipulation I'm talking about. High resistance. High resistance. That's the manipulation I'm talking about. But look how we use that ghost pool as well. We trade up into it. Now let's displace lower. That's what I mean by you can use that ghost pool right there. It's not random, but it's just, these conditions are very difficult. Remember, I'm telling y'all that. More difficult market conditions. Y'all smash that like button for me if y'all just joining. Subscribe to the channel if you're brand new. Click the link in the description if y'all want to learn this analysis. So now let's see if price want to kind of loosen up, man. You know, let's see if it wants to loosen up. There goes the manipulation again, acting like it wants to sell off, but nope. High resistance, liquidity conditions. So y'all in the chat, y'all understand how to identify high resistance conditions, or y'all still like, you know, and this is another reason why you shouldn't, like, if you're trading, don't be so quick to just jump in the markets. Y'all gotta, first thing you need to be able to do is identify the conditions. Are the waters choppy? Is there tide? Is the tide, you know, is the waters calm, or is the waters choppy and the tide is rolling? That's what you need to be able to do before you just jump into the market and try to take trades. It's very easy to identify once you know what you're looking for. Like right now, the tides are choppy. Now you can swim. Now you got some surfers that can swim in high tide and choppy waters, and they know what they're doing. So these conditions can be traded. But if you're somebody who's brand new, stay out the water because you don't have the experience. It's not for everybody. So look how we just act like we want to sell off, but we're trading back into the range. And that's the type of day it's going to be, just like that. That's the type of day it's going to be. Trading back into this SIBI on the 15 second. It's really a 5 minute or a 1 minute. For example, I'm going to take this right here. That's a 1 minute SIBI right there. That's why you should always stick to the higher time frame as well. Trade into that 1 minute SIBI in pink, and then we traded into that 15 second. And that's what I want to see right there. That looseness, that displacement lower, come down, take out the sell side liquidity. So a lot of y'all are probably looking at your portfolio like, man, how low can we go? Or you're concerned. It don't matter. I'm trying to teach y'all how to take advantage of opportunity both ways. Look at that right there, man. That's why I wouldn't be in this market right now. I would not be trading as a trader because of this. I would not be trading because of that. High resistance. High resistance. Let's go back out to the daily. Again, see how the daily looks? They're just, if you're just looking at the daily, you just see it like holding on top of, at the bottom of that discount fair value gap. That's all you see. Now, I wouldn't be surprised if they displace this back higher. Lawrence, you said the rules of trading must be kept or you will find out good thing is only paper trading. Yes, you got to have rules. You have to have protocols. And this is one of the protocols that I'm telling y'all. And what I'm doing right here is like, this is like in the gym. This isn't like thinking about money. I'm showing y'all how to tape read. I'm not even thinking about money right now. You got to be able to, these candlesticks get you paid. Understanding how these candles flow and operate. These things get you paid. And just like that. So if we was long-term investing, for example, and you see this fair value gap, remember I always tell y'all can buy at the top of the fair value gap. You can buy at the midway point, or you can buy at the low. And that's pretty much what price is kind of like showing you. But you got to keep in mind, below that fair value gap, there's another one. Also, this ghost pool right here. See this large wick? We can use that as well. But if we was just zoomed out here on the daily, like, 1 second. On the daily, and you see that the daily drops down into that fair value gap, and that fair value gap is equilibrium. It's at the midway point of the range. So the dealing range right here. Remember, this is a daily time frame. Every one of these candles take 24 hours. So if we're just sitting on the daily and you're a long-term investor, and you just seen earlier this week that price was at 265, and then now it retraced down to 233, which is a better buying opportunity, the 265 or the 233? And this is a investor, long-term position trader perspective. Which is a better buy, the 265 or the 233? Y'all tell me in the chat. 265 or 233 in the dealing range on the daily time frame. That's what I'm saying. So this is a whole different strategy that I'm showing you right now. This is a whole different strategy. 1 second. Yeah, this is a whole different strategy that I'm showing you. This is a investor's model. This is a position trader's model. So on this model, you just being patient, watching the days go by, and then you're waiting for it to come down into your below the 50% level PD arrays. And you can see the one we got below price, below the market, down here. You want to be a buyer at discount. You want to be a seller at premiums. But order flow is bullish. Let me see right quick. Let's see what that monthly is doing. It can get real tricky out here, man. This can get real tricky. Price is highly manipulated right now. And on the monthly time frame, we got 14 days left to complete the month of May. So this candle right here can shrink all the way back down and close bearish. I've seen it before. So right now, because they're holding price and they're consolidating price, is 50-50. You got to take into account that we're trading inside of this ghost pool right here. We can use that's a premium level. Remember, they sell at premiums and buy a discount. This 3-month fair value gap is still in play. That's why I still have it highlighted in my charts. This discounted area down here, that's still in play. That's still in play. So they might want to revisit this down here on the 3-month time frame. They might want to come back down and revisit this. That's going to disappoint a lot of y'all. I already know that's going to disappoint a lot of y'all, but that'll be another buying opportunity. But like I said, I showed y'all, I told y'all I want to see two things. I want to see them drop it down and either trade away, move far away from it, or it's going to drop down and hold in here for a few months. So this is a 3-month candle. We have 1 month and 14 days left. Let's see how long it takes to let's see where this candle closes. Once we get this candle closed right here, that would tell me more about the 3rd quarter of 2025. And just like that, looks like we're selling off. Just like that. High resistance conditions. And now, since we displaced lower, it definitely is going to come down and take out the liquidity resting below the market. It's definitely going to reach for that liquidity below the market. So that's a clear indication now. Like it's obvious now that they're going to drop it down and take out the AM session low right here, and then the low from Friday. And as you can see, we're in the lunch hour. We're in the lunch hour. Just like that. Y'all tell me in the chat, what was this over here? This is a market maker what over here? Market maker what? And then now we're currently in a what? Market maker what? Market maker buy model, market maker sell model. Look how we trading back into that 1 minute SIBI. Sell side imbalance, buy side inefficiency. We trade up into that. Now prices Now price has loosened up. Do y'all see? Now we're in low resistance conditions. You can kind of see it's still high resistance, but you can see it loosen up. So we dealt with all this right here, this back and forth up in here, and then boom. Now this will be a quick scalp down to sell side liquidity. It's clear and obvious now, right? You had to sit through the high resistance. You see the bodies of the candles, the wicks. You had to sit through this, and now boom, displacement lower. That's what I was telling y'all earlier. Y'all need to wait, sit through that, and see this move right here, that drop off right there. Now we retrace, and now price is in low resistance conditions to attack the sell side. When you watching my channel, we don't care what side the market is on, because again, opportunities on both sides of the market. So let's just say we took this trade right here. Let's say we took this trade, short the market. We're using the XRP CME Futures right there. Our take profit is, let's say we're going to go ahead and drop down here. If we take out last session low, we're going to go ahead and take out Friday's low. So that would be 113 ticks. This is a scalp. Y'all tell me what it is. Every tick is worth $5 with the CME Futures. Every tick is $5. So if I need to pull it up for y'all, let me pull it up. Right here. This goes live Monday, y'all. This goes live Monday. So again, every tick is $5 per contract. Every tick. Every 5 ticks is $25. So this particular trade will be 113 ticks. Y'all do the math. Y'all said it's 565 or trade 565. How much is it? Let me pull out my calculator. If y'all just joining, man, hit that like button for me. If you're brand new to the channel, subscribe. If you want to learn how to do technical analysis, click the link in the description. Get those lessons. I got private lessons. Get those lessons in so you can learn how to do this. We're going over price action. We're tape reading the market, and we're applying what it would look like if we traded the CME futures. And that's what I'm trying to lead y'all to. I will be providing signal services for that once we become liquid and they go live. And yes, this trade right here will net you $565 once we drop down, take out that liquidity. One second. Yeah, I'm on the phone, y'all. I'm on the phone. So I know the sound. I told y'all to hold on right quick. But you see we dropped down and took profit. So give me a second. All right, my bad, y'all. My bad. I had to take a phone call, very important phone call. But as you can see, our trade planned out. So here it is during the lunch hour. During the lunch hour, if we were trading the XRP futures, you would have netted you $565 just like that. And that's a trade. So now that we traded through that, now you got to be cautious because we can snap back. But my next objective will be down here at let me go to the daily time frame. My next objective for price, which would be right here, this other BISSY below price. This is a larger fair value gap. That's my next objective for XRP. So let's just say we hypothetically get it right now during the lunch hour. Let me zoom back down to the 5 minute. And let's just say y'all held this trade. Let's say you didn't take profit. That was a quick scalp that I showed y'all. What did we do? We took out the previous session low and this low right here. That was previous day's low. So we took out the previous session low and this low right here from Friday. That was our quick scalp, 565. But now market is in a low resistance profile, low resistance liquidity condition. So let's just say we held our position on this trade and we wanted to see it come down here. And we're trading the CME futures for XRP from the CME. And it traded down to the top of this daily fair value gap, which is right here. That is 378 ticks. Y'all tell me in the chat, how much profit would that be? 378 ticks. Every tick is worth $5. Every one tick for XRP futures is worth $5. So how many ticks would that be? I mean, how much profit would that be? 378 ticks. And if y'all want to learn how to do this, y'all click that link in the description, sign up to the Patreon, learn the fundamentals on how to do this. Learn how to do this. Yes, that will be $1,890. So here it is on a Saturday. Go bank you a quick $1,890, and that's just one contract. So let's just say you got a lot of equity. Let's say you got about $500,000, and I'm just showing you an example of one contract. In the futures market, there is no limit on how many contracts you can trade at one time. That's the beauty of futures. So there is no limit to how many contracts you can trade. It all depends on your equity. So all of us plan on being crypto millionaires, XRP millionaires, etc. So once you become an XRP millionaire, then you have more equity, you have more capital to put in the market for trading. So let's just say this is just one contract. That's eight. If we was to trade down to the bottom of this fair value gap, that would be $1,890. Let's just say we added 5 contracts. Let's just say we added 5 contracts. What would that be? You can enter all 5 contracts on your entry point, which will be up here at the fair value gap right here. That was our entry point. That entry right there, 5 contracts at one time. Now it's more risk, but we want to enter on 5 contracts. How much would that be in profit if we was to trade down here below the market and take profit? Y'all tell me in the chat. Y'all tell me in the chat. There you go, Lawrence. There y'all go. So again, like that, if you're sitting on about 500,000, you know, that's really minuscule. That ain't a lot of money. That ain't $9,450. What's up, Carlos? Shout out. Yes, blessing. Thank God for another day. Appreciate you joining. So yes, for sure. So imagine here it is. For example, you're trading within 1 hour from 12 o'clock to 1 o'clock. You might want to hold this until later, but let's just say you're just trading within this window in time and you enter a trade. It doesn't take long. Even let's go back down to the 1 minute. How long did that scalp take? Let's put some time behind it. So this is our entry point right here. Let me take a ruler from entry right here down to take profit right here. That trade took 6 minutes. So again, earlier, $560. I mean, that was 113 ticks. Let's backtrace right quick. Let's review this scalp that we just did. That was 5 times 113. That was $565. That trade took 6 minutes out your day. 6 minutes out your goddamn day. And you made $565 on one contract. Now, let's just say you want to multiply it by 5. You want to add 5 contracts. That would have banked you $2,825 on 5 contracts. And you did it in 6 minutes. 6 minutes. $2,825 in 6 minutes. That's more than some of y'all made at your job this week. And you did it in 6 minutes out your day on a Saturday. That's the type of potential we talking about. So on this particular trade, we're adding 5 contracts from entry down to take profit to bank $9,000. And we're using the real numbers. Y'all, if y'all just think I'm making up numbers, no, we're using the XRP futures contracts from the CME. We're using real figures, real numbers, and we're just counting it up. And we're just applying it and practicing and demoing real live price action. And y'all witnessing it live. We got a macro coming up here in a minute. I ain't gonna keep y'all too much longer. I'm gonna get up out here shortly, but I might let this run to see what we want to do. You say, how much is it for one XRP contract? Again, if you're just joining, your broker, they're going to require you to have a minimum requirement to fund the account for XRP futures. If you meet the requirement, and it's not like a lot of money. Normally, it's not a lot. It's like, for example, let me come over here. Let's come to Trade Station. This is one of the brokers that I use, Trade Station. They are integrated with TradingView. Let's go up to pricing. Click on futures margin rates. And for example, let's look at crypto right quick. And I know they are. Oh shit! Wait. Did I just see something? Oh my god! So we in business, y'all. We in business. Oh my goodness. We are in business. Oh my goodness. Wow. So this is updated. This is breaking news. So remember I was saying a lot of y'all, we was concerned like, man, are they going to add XRP to other platforms? Because initially, and they haven't even announced this. So initially they were just saying Robinhood. They was only going to be offered on Robinhood. So this is a broker that I use, which is TradeStation. And guess what I see? And this is going to blow y'all mind. So look for damn, I can't zoom in. 1 second. Nah, they not letting me zoom in, yo. But it's all good. But look, you see where it says intraday initial right here? Intraday initial. Hopefully y'all can see that. Y'all press 1 if y'all can see that. Intraday initial. Okay, y'all can see that? Y'all press 1. Y'all let me know. The intraday initial is how much. That's the minimum requirement. This gonna fuck some of y'all head up. The intraday initial, that's the minimum requirement for. That's the balance they want you to have for these products. Now, crypto is crazy. But for example, if you see right here where it says, 1 second, I can't zoom in. No, I can't zoom in. That's crazy. Anyway, the intraday requirement, let's say for the CME Bitcoin futures, they want you to have $34,000 for the CME. That's the big contract. So that's for people with big money. That's for institutions, right? 34,000 initial intraday requirement. You got to have 34,000 in the account. But don't be like, well, I ain't got fucking 34,000 to put in the account. No. Look at the micro. That's why when a lot of y'all in here, y'all not going to be able to afford the big contracts until y'all become wealthy individuals. So for us retail, we could trade micros. Look at the CME micro Bitcoin. Look how much they want for the initial. $705 compared to the larger contract. They want you to have $34,000. So breaking news for people that's just joining. This is TradeStation. This is one of the brokers that I use. They have quietly added XRP futures. They have quietly added the futures contracts for XRP. Now look at the initial requirement for the big contract XRP. They want you to have $64,000 in the account. They want you to have $64,000 in the trade account just to trade XRP. But that's okay because we're not going to be trading that. Unless you become a high net worth individual, then you can go in there and trade that. We're going to focus on the micro XRP, and they want you to have at least 3,200. Now, that might be high for some people, I understand, but that's more affordable than the $64,000 requirement. So we're going to focus on the micro XRP futures. So if y'all want to trade the micro XRP futures, you got to initially have 3,200 in the account. Now, like I'm showing you, I'm demonstrating how quickly you can run up an account if you know what you're doing. If you know what you're doing, you could take 3,200 and, like, for example, this trade right here, you can see it selling off. We already calculated. This is $378, 378 ticks. So for every tick, and matter of fact, let me go look at the micro. 1 second, y'all. We got to change figures. Because, again, most people ain't going to have 64,000 to put in the account. So what I need to do is I need to go look up MX. Let me see what it is. Right, 1 second. The code for it is MXP, micro XRP. Micro XRP specs right here. So this is more affordable. This is way more affordable than the other contracts. So for every tick, it's 25 cents per contract. This is way more affordable than the larger contract. Every tick is 25 cents. So every 5 ticks is $1.25. Do you see the drastic difference in pricing from the micro and the full contract, the large contract? We're gonna be focusing on micro because a lot of y'all can afford the micros. You just need to have an initial requirement of 3,200 in the account. Now, a lot of y'all got more than that invested in crypto, but if you want to learn how to trade futures where you can build your capital up, then that's the difference. So, let's put the figures behind this trade right here. Let's do the figures for the micro behind the trade we're looking at right now. So, every tick is 25 cents. This is 378 ticks. So, we're going to do 378 times 0.25. Y'all tell me in the chat, what is that? Y'all tell me in the chat, what is that? 378 ticks times 25 cents. Now, you see the drastic difference? Isn't that more doable? Are y'all, okay, for example, are y'all willing to risk that type of amount of money compared to that larger contract? Now, remember I said you can amplify it by adding more contracts. So you just take the $94.50 times 5 contracts, that's $472. That's more doable for the micros. You see that? You see the drastic difference? Trading the micros compared to the big boy contract. The big boy contract is going to be for institutions. Me, I'm not scared to jump in that water. But you got to have 64,000 initial day. You got to have 64,000 in the account. And what's interesting is the CME Bitcoin futures is way less. It's damn near 2 times less than the XRP. So what does that tell y'all? What does that tell y'all? That the XRP futures, you got to have an initial requirement way more than the Bitcoin futures. What does that tell y'all? That should tell y'all a lot right there. That for the Bitcoin futures, you got to have 34,000. The XRP futures, you got to have 64,000. But if you're just retail, you need to have at least 3,200 in the account. You need to have at least 3,200 in the account for the micro. And then look at the micro XRP compared to the micro Bitcoin. The micro Bitcoin, you just need $705. The micro Ethereum, you need $94. But for the micro XRP, you need to have 3,200 in the account. And I'm going to be showing y'all. This is in an exchange initially. So I'm just breaking this news. Shout out to you, Naquan. Initially, there was only reporting, and they're still reporting that the XRP futures was only going to be on Robinhood. But then I come over here just randomly during this live stream to my broker. This is one of my brokers that I use. This is TradeStation. TradeStation is integrated with TradingView. So if I go down to right here on TradingView, you can see TradeStation. These are the top row is the top brokers that I use. TradeStation right here. So TradeStation, I just found out that they're going to be adding the XRP futures contracts. They go live Monday, and I'm showing you that they already priced them in, and boom, TradeStation. So if y'all want to sign up, if y'all want to go, matter of fact, if y'all plan on signing up to the signal service that I'm going to come out with, y'all can go ahead and sign up to one of these exchanges, brokers. I'm gonna tell y'all what they are: TradeStation or AMP, Tradeovate, and maybe Iron Beam. But I'm gonna be utilizing TradeStation. And just for the hell of it, let's go ahead and go to Tradeovate. Let me go look at Tradeovate just to see if they're adding it. Let's go to Tradeovate. This is another broker that I use. Let's go to pricing, day margins. Let me see right quick. Exchange, CME, crypto, search. So they haven't updated their website. So TradeStation is on it. They haven't updated. I'm sure they're gonna bring it to TradeOvate eventually, but definitely TradeStation is adding XRP futures, and they're integrated with TradingView. So we're gonna be in business, y'all. So y'all can go ahead and sign up to some of these exchanges. Come sign up to TradeStation. Y'all can do that over the weekend or today. Y'all can go ahead and sign up for them. And if you're interested in trading regulated futures contracts for XRP that goes live Monday, come over here to TradeStation. We got the micro XRP. We got XRP. Micro requires you to have 3,200 in the broker account. That's doable for most of us. If you're a working citizen, you're employed, you got to hustle, you can put up 3,200. You should be able to have that. Most of y'all have way more in crypto. Now, for the big boy contract, you need $64,000 in the account. That's going to be for like institutions, large, big time traders. $64,000 in the account. Once XRP takes off, a lot of y'all will have that. Let's say you become a millionaire. And I wouldn't be just trading XRP neither. I'll be like trading different contracts like S&P, NASDAQ. But eventually you start trading, you take $50,000, you grow 50,000 to 100,000. And then you will be able to trade. If you, let's say for example, you got 100,000 in an account, you can go ahead and go trade the XRP futures contracts, the large ones, and they pay out way more. And I'm giving y'all trade examples on how that looks. Again, on this particular trade that I'm showing y'all, if we trade down to the bottom of that fair value gap down here, that will be $9,000. Trump Swan, what you talking about over here? What you talking about over here? 0.5 times one contract of XRP of 500 XRP X. I don't know what you talking about over here. I don't know what you adding up, Trump Swan. What are you adding up, Trump Swan? What are you adding up? Are you saying my math is wrong? Because my math ain't wrong. Oh, you talking about the Coinbase? Okay, yeah. See, I'm not interested in the Coinbase derivatives. Me personally, they're going live, but I'm not interested in it. You know why? Because the CME is the largest derivative exchange in the world. Now, those are the nano. You're talking about the nano contracts. So if you want something a little bit more affordable, and you can't handle the micros, you have to go to Coinbase and look at the nanos. And the nanos are pretty much, you know, I would say if you're somebody brand new, I didn't mean to pull that up, but here we go. This is the nano contract for XRP Coinbase. And if you're somebody who's brand new and you don't want to risk, you know, you kind of want to practice and don't want to risk a whole lot of money, come over here and trade the nano. You said no, the contract size is small and easier to trade. Yes, you're talking about the nano. I'm agreeing with you, Trump Swan. You're talking about the nano on Coinbase. This is the nano. Look up here. This is Coinbase. I'm already signed up to Coinbase and I already know what it looks like. This is the nano XRP futures. So they got nano contracts, which is smaller than the micros. They got micro contracts that are smaller than the large contracts. And then they got the large contracts. Nanos, like you're saying, they are smaller and easier to afford. And I suggest people who are brand new, don't know nothing about trading, and you want to get your feet wet, start with the nano contracts because the fluctuation in price ain't gonna hurt you. It's like you said, it's pennies. You're dealing with pennies. But for me, I can handle, because XRP, the futures contract for XRP is insane. They pay out high, and you got to have a lot of initial capital to put into the account. See, with Coinbase, you don't have to have no initial capital. You can start with whatever. They don't require you to have an initial requirement. That's because you're trading nano futures. But once you step up into the bigger boy league, the big boy leagues like TradeStation right here, they require you to have at least 3,200 to trade the micros. And then once you step up into the, with the institutions, with the whales, they require you to have $64,000 to trade those big boy contracts. So keep that in mind. We're going to get there one day. I'm going to get there one day. And we probably can demo trade some of it. But to start off, you can run up, look, the micros, you can run that up real quick. You can make $2,000, $3,000, $4,000 in a week trading micros. So don't sleep on the micro contracts. But I'm going to initially start off with micros, and I'm going to provide a signal service for micro contracts. And for y'all that are watching my channel that are high net worth individuals, I might have a service for the larger contracts, $64,000, the larger XRP contracts that you have to have 64,000 initial requirement. So all of this goes live Monday, and we just stumbled upon this. I can't tell you, they only offered 1, 2, 3, 4 products before, and then they snuck this in quietly and added the XRP futures contract on this broker. So y'all come sign up for TradeStation, because that's another place. If you want to use TradingView, that's another place where y'all can come trade. You said 1,000 ticks on Coinbase is a 10-cent move in price. I understand that Trump swung. I need something more though. I need a little bit more than that. Me personally, I can't speak for everybody. Again, I do this. This is what I do. So I already know what this trading stuff looks like. Now look at price reversing. That's because we dropped down, took out liquidity. Now it's reversing. But y'all stay in tune, man. Y'all tap in. Make sure y'all sign up to the Patreon if y'all interested to learning this skill set. Y'all come over here and sign up to it. I'm gonna leave y'all on that note. Leave y'all something to think about. The futures contracts going live. Y'all go ahead and sign up to those brokers. Get that out the way so you can go ahead and participate. Y'all can sign up this weekend. They KYC you. They get you in the system. And then sometime next week, you can start funding your account. That don't mean you got to go trade real money, but you could just, it's something to just be prepared for. Just sign up for it, just like y'all sign up for exchanges, and have it ready and available for you to whenever you feel the need and you're comfortable to go take the risk. So I'm gonna leave y'all on that note. Appreciate y'all joining on this Saturday. Trying to think what else. We probably got a busy week coming up next week. I will go live tomorrow and Monday. And y'all tap in, man. Y'all tap in. Any questions before I head up out of here? Y'all let me know. Appreciate it, Lawrence. Appreciate it. Appreciate it. But yeah, man, y'all subscribe to the channel if y'all brand new. Click the link in the description for the Patreon. And I'll see y'all on the next one. Peace out.